Greetings, market rebels. Welcome to this week's sector situation. It's Sunday, May 19th, 2024. It's about quarter after 11 a.m. here on the East Coast. I'm Wayne, just recorded macro measure, and I'm going to take care of sector situation here. Trusty disclaimer from Market Rebellion, trusty intellectual property rights notice, and then I'll leave this up briefly for folks that skipped over macro measure, which is fine. But yeah, I think the contrasts are starting to become lethal, where I think a lot of people just have the disbelief factor, which I can't say I blame them on. And maybe they're having a hard time with this market doing what it's been doing. And then at the same time, I think that there's possibilities that things are lurking beneath the surface, that the true believers that are buying, thinking we just can't be stopped in this election year, and we're set up for great performance, which we are set for solid performance according to history. But those folks could be also in for a little bit of a lethal situation if they if certain things unfold. And I think one of those would just be sort of like the financial system issues that are just there and are just not being discussed or are that concerned about. Or that many investors are that concerned about it at this point in time because of how the market's been behaving. So we shall see. As always, that's the good part about things. But on that note, let's stop our share and we'll switch over to the charts. And I don't think we'll be doing too much this week that's really heavy duty. We'll go through things as we often do, but I think it's sort of, you can make the argument, well, this, well, that, more than there's something really definitive. I think there's a little bit more reveal in the sector charts in terms of concern than appear in the macro measure type charts. The macro measure charts, I think overall look really good with the, save for, right, the mentions I've had the past several weeks of beware the double top, beware the lower high, beware the false breakout. You could have a legit breakout. Those are scenarios we're dealing with, I think right now. But if you look at the grid of 12 that we normally start with, what pops out to me here is that, first of all, we'll start up here, XLE, that did re-engage, right? So that won't give me a better view, unfortunately, in this little box, but we'll look at it if we have to on a bigger one. But that started to pop through our resistance line. And I'll just note that on that one, I thought I was already on, I thought it was linked, but my bad. Let me get here. Try to show it on this chart here. And we don't need that much history, but I think it'll come up better on like a 3-month or 6-month. Let's just do a 6-month. But you can see that the resistance line we had in place, I didn't have to do anything with that line. What they did, textbook pullback after a very nice strong run. And then the first hint that there could be something like this breakout attempt starting that could be on the way was this day right here, basically Wednesday, right? Big drop, big recovery, higher low gets left, and the strength is demonstrated by it poking its head up there. Hesitated, I think, at resistance near the 20 in blue. You've got other SMAs in there too, but our line, more importantly for us, the way I like to chart, the line was there, and that also kind of held things back for a day or two. They finally mustered it. So we got to see if this is real or not. Now we're looking for follow through. Now we're looking for, should we worry about a lower high? What's going to happen here? But this is right with the dollar rolling over. And then we talked about that in macro measure. That could be good there. So we'll go back to our grid, but that kind of takes care of that. We know kind of where you're in breakout. If the dollar keeps falling, probably helps. Where were we on? We were right here, I think. Yeah. So the other things I would note is that, right, we haven't gotten this good breakout from XLK or XLC yet. Right there, right. This is right near the prior highs in XLK, the technology. They both are RSI wise. They both have room if they want to keep going, right? Where there's not a big problem before they could put a little something together, at least before they'd become technically or theoretically overbought in terms of RSI. But you can see that that's really not the leading situation that it was at one time when this rally got started off the lows in the fall. So those are just not doing it the way that they once did. Other things have naturally picked up the pace. Certainly, the financials have been doing really well, but they're now overbought, right? So that's starting to get a little extended. They were very extended in here, though, and it didn't matter for a while. So you got to keep that in mind too. But this is now also on false breakout watch, follow through watch, so on and so forth, right? So but the two out of three that I like to keep an eye on very closely are energy and financials. They're really working. The third one in my mix that I like to keep a really closer eye on is transports, and they're just not there. And I talked about that a little bit in macro measure. Been talking about that for a while. That's kind of one of my canaries. The IWM is another big canary. I think if they start to go and really power through, then you're really in a legit, secular bull, maybe as per the charts, right? You'd be thinking, wow, everything that's important has really started to perform, right? The small caps, the transports are now kind of confirming what the uh, the financials have been saying, and energy's in high demand, and so on and so forth. But that's not the case in XTN. It just doesn't. It started to try, but had a setback right last week in a market that was otherwise pretty strong. So I think some of the data that we presented in some tabs and just comments about how things are not really wonderful in this economy is evidence there in transports. Another area that's a little bit, I think this is where more of the concern starts coming in when you look at these sector charts, and you don't see a lot of concern on the macro charts, as I noted, but your discretionary sector is really lagging, right? And this is with Costco being really an unstoppable juggernaut lately. But right, staples have ramped. Now, there might be reasons that I don't have the time, unfortunately, to delve into for this. You always want to get into the details when you see something that's sort of like, why is it like that? Why are we not seeing better performance from the one we prefer, XLY, if everything's wonderful? And why are we seeing that out of XLP? So that's a little bit concerning. You got to look into that, right? If you got to sort of try to dig down and figure that out. I just don't have the time to do it because I'm busy all the time, unfortunately. But that would be something I'd want to try to figure out. Is there a reason for this? Is it a few heavier weighted companies that are really weighing one down and helping the other pop? What's going on here? That is something that may be worth a look. But on the surface, just at this level, we're looking at it, not really what you want to see, right? That's a little concerning that people are still bidding up staples and they're not willing to bid up the discretionary sector so much. Another sort of concerning little bit is these other former sort of leaders that were having us scratch our heads, especially the industrials with the way rates were. But these have not broken out yet. You can see we've got a lower high in XLB at this point. I think there's a good case for if things are going to keep going in terms of bull market, that this really should go dramatically, significantly. But that's a whole nother story. This is certainly below here. It's not way off still, but it's certainly not threatening the breakout at this moment. Neither are the industrials, otherwise known as the XLI here. So nothing really to report about in terms of overbought, oversold on most of these things. You can see XLP is up there. You can see XLF is up there. You can see that even healthcare, which made a nice comeback, is up there, XLV. But again, that hasn't broken out. The other one that's really overbought is XLU. And we were talking about this a while ago, and kind of surprising, right? That usually something that's seen as very defensive has been such a powerhouse, but that's being attributed to, I guess, partially to crypto, but mostly to the AI usage and electricity demand. Don't have time to confirm that that's absolutely true, but I've seen some stories about that. We speculated about maybe that was the case, and turns out there was a story that popped up about that. So that might explain it. Had a bearish idea in here. It needed to fall below 71.07, and that it couldn't do that. I think that idea expired already. And it's so counter trend that it doesn't really bother me, that it did. But if another big hit comes in on the put side, and we start seeing rollover, I'll certainly put another counter trend trade in. That's not what I typically do. I don't like trading against a very strong trend, but sometimes you've got to step in, and when it gets a little toasty or a lot toasty in the case of XLU recently on overboughtness and stretch and things like that, then it becomes maybe you entertain it, but you certainly do not overstay your welcome, whether you're winning or losing in something like that. You got to be a roller, I think, and a good one at that. But overall, right, we're not seeing this confirmation that everything's wonderful. You can't really make the case that, hey, real estate's lagging, the healthcare is lagging, XLC is lagging. You've got XLY is certainly lagging. Transports are lagging, so they're not really up there. Even XLB to an extent is lagging, and well, energy's I think looking better, but it is off the high. It's still several percent off the high. So there's a few really good signs as we noted, but so you're not seeing that across the board. Yes, well, everything's wonderful. We have seen that before. We saw that I think about I think it was like about a month and a half ago, and that's when we said something like, be, kind of like be careful because when it doesn't really get all that much better than it is right now, and then things shortly thereafter just started to deteriorate because you just don't really get that firing on all 12 cylinders type thing, indefinitely for too long. There are times, I guess, but it's not where everything's working out picture perfect for very long, or it happens that frequently. So yeah, there's some little sources of concern here. You want to start seeing a lot of these things do better. You certainly would rather see, if there's going to be some selling in consumer land, I'd rather see the staples back off and discretionary start to move up. If this is all explained in XLU by this just great demand, that's fine. But if it's partially defensively minded players as well, that's a little bit of a concern as well. And I think these former leaders just not doing it is a concern. And certainly transports is a concern. So I don't want to belabor other sectors, but these are kind of just the general macro insight takes or whatever. I'll try to see what we can dig up on a couple other charts this way, and let's see if there's anything out there. We've been taught the copper thing became interesting because that apparently is drawing a lot of interest of late. That's not something you see. There's been apparently big shorts are in there, so that's turning out to be a problem. But it also it's another tough read for us because we don't know how much of it is sort of internal plumbing within the copper market, or is it this dramatic demand? We were thinking it was a good sign for a while, right? Oh, maybe the global economy is turning the corner a little bit. And I think there are some signs that the global economy in some ways is a little bit better than it was a little while ago. But I don't think that explains this really strong surge entirely in copper. It could. I'm not saying it's not part of it. I'm just saying that you can see that historically, this is quite a strong surge that we're seeing here, and you're starting to get really stretched. And your Bollingers, which were relatively narrow, are now starting to widen pretty dramatically, and you're well beyond them. So this to me is something a little different than just, hey, demand is really good. I would think that if these governments weren't so heavy-handed in their manipulation of all things, and they hadn't deformed capitalism to the point that they did, and we had this sort of synchronous global expansion happening naturally, organically, then this kind of thing could happen, given where some very large countries are in terms of their economic development and what's planned. And you could have a great demand situation, but we know there's possible market internals here, and we also know that there's probably is solid demand from some areas. But other things I'm seeing, it's kind of like a little bit more mixed news about the global economy this year. I'm sorry, at this time than I was seeing. I started seeing a little bit more positive type stuff. And here's gold futures. We're going to hop right over to another metal. And as we've been saying, this looks pretty good. I don't know how far this will go back. I always forget which ones go back the furthest when we do this on Thinkorswim. But obviously, right, that is a new closing high Let's see if we can get more data. Remember, this is the one we've been looking at. It does go back a long ways. Wow. So this is kind of that cup and handle we were talking about last fall and how it was approaching the top of the handle and something could start to maybe develop. And there's just so much potential here. These things have been suppressed for so long, and there's been this massive acquisition binge by many parties, including central banks and well, a lot of just different players, pretty much the whole spectrum of buyers. And you could see that that's really, and especially right with inflation doing what it has done globally, domestically. So that is really powerful. I think that our first projection is there. So we're about 100 points away. But that's very, very obviously very strong right now. And it's starting to become overbought on a monthly basis. So again, if you're trading inside of it, it's one thing. If you're just a long term, I'm holding on, which is kind of what I am. I'm not saying if there's an insane burst, I won't sell some and then look for a pullback, but I I'm just saying that yeah, I think there's something still potentially very good there, and I think that's concerning, right? That you got this great demand for precious metals. That to me, that's kind of like a little bit of the background noise that gets my spidey sense going. A little bit, things like that. Like, why is this so strong? Why is this in such great demand right now? That is why I'm saying that there's something lurking out there. I don't know what it is. It just feels like there's something, and I'm not really off the charts with the spidey sense readings right now. I'm kind of still low on them. They're kind of in the lower end of the range of even when I get them, but I feel like they could accelerate quickly. So that's a little bit of a problem for me anyway, just the way that I've kind of developed a little bit of a sense on things that just intuitive sort of like, reminder from your intuition, like, hey, you got to check into this, check into that. You got to be smart about this, be careful there, that kind of thing. But you can see this really projects, right? This SLV, just using another instrument here. This is the daily. If I go back, I'm sorry, this is the weekly. It's obviously done very well. We have an idea in there. It's good for a couple more weeks. There's a couple other names we've got in there, I think, right now, but it still hasn't even done anything on the big picture pattern. And I know they're trying. I did talk about how the dude and other people are trying to get the silver squeeze going again. That's something that's popped up before. It hasn't been a good sign before. So again, that's just another wrinkle. But boy, this thing's really on the brink. If you look at that cup and handle, it's almost like a decade and a half in the making. So wow, if these kind of things fire in those areas, that's a big deal. It's a really big deal. We did look at XLRE and the housing market. We'll look at that too. We did look at that briefly on the grid of 12. Let's get back to more of a daily view. Thinkorswim is really hesitating on me here. So there's the daily view, right? Not really lighting the world on fire. XHB, let's see how that looks in comparison. That is, again, not lighting the world on fire. A little bit of rough stuff there. Now, if you think about this, this is a little concerning because in light of rates rolling over really hard the last couple of weeks, the TNX has rolled over for, I'd say, the last 2.5 weeks, pretty hard. Now, these should be, well, that's wonderful for real estate, not really acting incredibly well, right? Solid, can't complain about the performance, but kind of finished the week on a sour note. So let's take a look at those ETFs that we had to uncover because we couldn't get lumber futures. Wouldn't cut. That certainly looks better, and usually they're pretty correlated. So if both of those are popping, that's a decent sign, and they both are. So there could be some XHB sort of specifics to a few companies or whatnot that are keeping that where it is. Remember, I've been prematurely bearish on that from a fundamental perspective for a very long time. And that's exactly why I don't trade off that. And that's why I try to put ideas in that have nothing to do with my fundamental takes on it, because I just don't see this sustaining itself. But what do I know? Again, the market proves I know very little. But anyway, that's it. I mean, I think it's not a great situation, but you've got to give it its due. It's hanging in there. The ETFs are hanging in there. I don't know if LB is back. Let's see. if they do bring back some lumber futures, micro large cap future, let's do LB. This is it. Let's see. Lumber futures, LBS. Let's see if we can get LBS. If it's going to cycle on me, I could be doomed here. No, I think it's going to give it to me. So that's interesting. Now, is this current? No, that doesn't look current. That's an old. Okay, that's just an old. Let's see if we can. What else did they offer us there? LBR, lumber futures. Let's see what we've got. If this comes up, not looking good. Might have to pick a specific one. Uh-oh, I'm getting nothing but cycling. Not good. All right, let me see if I can do escape or something there. LB, let's do anything there that's going to work for me. Nope. Well, these are current, but I'm not even positive what I'm looking at. LBRU4. Yeah, I'm going to stay away because I'm not really sure what I'm looking at here to even say anything about it. They kind of made it. We had continuous futures that we were able to chart before, and they kind of dumped that symbol, kind of like what they did something to it, kind of like the large cap micro. Yeah, that's too bad. But it doesn't matter. We kind of went with wood and cut as substitutes, and you could see they have popped. So I don't see anything that's horrible in the lumber that would confirm that the housing and XLRE and the other things are really in, walking, whistling past the graveyard right now, and they're really in trouble. I just don't see that, which is a good sign that I still think that's at odds with how I think rates are, and these extremely high prices are going to affect things, but it just hasn't mattered yet. And that's why the charts are everything, because we all know it's in the timing and management. So there you go. What else can I cover? We covered some commodities. We covered the precious metals. We covered the sectors. I'm trying to think if there's anything else I can sort of flip to that might help us out a little bit this week. I'm not coming up with anything because I already did a lot of the discussion for, if we don't start to see some things participate, what to look out for, false breakouts. But yeah, you're at that kind of level where there's just a little bit of you've got to be a little bit careful here because of some of these signs here. So that's probably my main sector situation takeaway, is that though everything looks good sort of on the large big picture surface, a lot of things here could be better. They're not horrible, right? But they definitely could be better. And if you're looking for that confirmation that this really is a bull with many years to come, which would be good news for all of us, I think. This is not helping. This is maybe hurting a little bit versus macro measure. So again, it's a little mixed, and I think I did go through tabs in macro measure. Haven't done that in a while. That's probably what made the video a little bit longer than I'm trying to make them. But I just wanted to run through like how the inflation situation mainly is still a problem, and how there's real struggles out there, and how really with all that, right, if we do get the Powell sort of bald-faced hypocrisy, and he just, regardless of his prior words, starts to cut in a few months, as the market seems to think he may, that is really not good historically, right? So that is not a good historical development. You're usually down double digits 12 months later once the Fed starts its round of cutting. So that's another reason why you've got to be on guard if we do break out and keep going. And somehow in the midst of new all-time highs, Powell feels the need to lower interest rates, which really is interesting, but could happen apparently anyway. Yeah, that's when you have to be like, uh-oh, he's cutting, and that's sort of like that the red flag of why is he doing this now, right? We've got a great market here. Why are we doing this now? But these guys, as we've been saying, they've been front running, I think, a lot of potential good news. There's a theory they've been saying that they think that people have been, positioning themselves for a Trump victory. May or may not be true. I guess they perceive that as more business friendly or whatnot. That's one argument that I've heard a couple times from different people, even folks at Market Rebellion sharing that. That's what people think might be happening here, because the economy and the consumer are not really in this wonderful shape, and yet they're pricing stocks that way. But I think a lot of it is, to me, is that stocks are keeping up with inflation. I think people are adjusting stock prices to factor in inflation, and they, looking at them and saying, well, this is more, this is more, then these prices should be higher. This should be more too. So we'll see. We'll see what happens, as always. But I think that's it. I mean, I just think you've got a little bit of hesitation from some sectors, and that's the reason why you've got to be careful here. And you're always got to be careful when you're breaking out, because that these guys are the masters of the shell game. It's a real breakout. No, it isn't. It's a false breakout. No, it's not. That kind of thing. So just be on guard for that. But the whole big story has to be, right. The one that we know of is the Nvidia EPS on Wednesday, I believe, after the market closes. So there could be shenanigans in front of it. There could be shenanigans after it. It could reverse the week. It could emphasize the week. You just never know. We don't know what leads up to it. But after that, if they do end May on a real strong push, you could see, I think, in June, a little bit of a pullback, because they might have overdone it in the short run. And then I think that would set them up for their strong summer in this fourth year of the presidential election cycle. That would lead into the wonderfulness of EPS season in July, where that much like last year, there was a big celebration towards the end of July, and then things leave off. August tends to be solid too, but then things leave off in September, and they're a little rough in front of the election. People tidy up their risk, I guess, and just sort of, until they know what's happening, they're not willing to go commit. And then whoever wins, doesn't really matter. They tend to start buying stocks all over again after the election into year's end. Typical performance. So just keep that in mind. More macro measure than sector situation, but just in case you don't watch that one. But yeah, I don't think there's anything here where I could really say, hey, look at this or that. If you want to keep buying leaders, clearly, right, your financials are one of your spaces right now, and the XLU is the other. But I'm not saying not to, but I'm not loving those. I'd rather see something that had a nice corrective activity like energy. I'll be very happy if UOA appears in energy that seems to be bullish, and the charts continue to look that way, that we basically bring energy back towards the test of the high. That would be a nice thing to see as well. I would love to see this sort of flag or pennant that you're in here in XLY start to break to the upside. And I think there could be good trades in there if that's the case. And if there are, right, that would help. And then we get good performance. That would help things look a little better on the consumer side, at least. Even if XLP stays strong, the divergence between the two won't be as great. So that would also be a good sign. And naturally, if somehow XTN can start to really put it together, I don't know if it will, of course, but it struggled certainly last week, in a week that was good for the market. But if it does, that would also be a welcome sign. So I'm going to end on that note. I'm going to wish everyone a wonderful conclusion to their weekend, a wonderful trading week ahead. I want to thank everyone for tuning in. I do hope you got something out of this video that can help you out this week or some week in the future. And thanks again for checking in. Everyone, take care. I'll be in touch through my usual channels.